All right, so the markets were closed yesterday. It was MLK Day, which means the last real trading day was on Friday. We did have a slightly green day on Friday. I mean, this was following the CPI numbers that came out, which weren't really bullish or bearish in my opinion. I mean, in my opinion, fundamentally the economy is very bearish, but the reaction to the numbers were kind of sideways. Obviously, there was a roller coaster, but it closed green ever so slightly, and there was follow through, but very weak follow through. So, although the markets reacted green, it was ever so slightly. And for me, the markets had already gone up too much. For me, the markets are still overextended. The economy is incredibly bearish. It's in a recession. Rates are going up. There's nothing good. There's nothing that warrants the market going further, the market going higher. So I was looking for a reversal at any moment. I thought we might get it at this descending line. We may have gotten it already. So the S&P today was slightly red. It was an unchanged day, but to me, it's the potential for a reversal doji here. And then I think we will come back down to this ascending line, then maybe go sideways and then start to flush. And as soon as we lose this ascending line here on the S&P, and the equivalent will take place in the Nasdaq, the charts look pretty much identical. Once we lose this, if we get there, of course, and I think we will, we go back down to this final support, which is ever so close to this one here. So these two might actually coincide, if you see what I mean. These two could have, you could bounce off both of them on the same day. And then it becomes very bearish. Then it becomes you zoom out. Oh, that's the lower high there, just very close to this last lower high, even though it's higher. And then the whole chart looks very bearish. It basically becomes destined to come down and test its lows. And then this descending channel, the pennant that we're in, becomes tighter and tighter. And for me, the path of least resistance and the trend is down. So I'm still bearish. Nasdaq, same sort of okay, we were up 0.2%, just like the SPY was down 2%, no difference. Basically an unchanged day, but potential for reversal. However, the Dow Jones was down over 1%. And by the way, the Russel was also the same as the Nasdaq and the S&P, just sort of, doji reversal after making this extended move right into resistance. So that really isn't a surprise. But the Dow Jones, which has been stronger than everything else for weeks, if not months, that was down. That was the bearish engulfing. And for me, we could come lower. I've left these staircase down, and I'm going to leave it because I think we just sort of come back down, test the prior support, go sideways, little bounce, and come back down, just as we will in the other indices. So for me, it was a slightly bearish day, even though the S&P, the Nasdaq, and the Russell were basically unchanged. I thought that was a bit of a reversal candle there, and the Dow Jones being down 1% sort of shifts it in the favor of the bears, in my opinion. The VIX, not going to talk about it, destroyed indicator. So those are the markets. And by the way, the DAX, the German market that closed green before the US markets turn a bit bearish, that's just totally overextended. I just, words fail me. This is totally unjustified. I mean, yes, there's inflation, so you could say that across all stock markets go up because the inflation is represented. Look at the Zimbabwean stock market. Nothing did better than the Zimbabwean stock market. But you couldn't buy anything with the currency. But still, it should come down at least to prior resistance. So I think the DAX will be at 14,500 in no time. But otherwise, let's just stick to the US markets. Potential for reversal. Let's see what happens tomorrow. Let's look at rates. Not too much to talk about here. No major move. In the European rates, there was a bit of a move lower in yield, but basically unchanged. Sideways, 2-year sideways. We have to watch this channel, these two resistance points here, and this channel down here. If we do flush, we should have strong support down here. Remember, the 2-year is the yield that the Fed watches and basically has to match. The Federal Reserve Funds rate needs to basically follow the 2-year. So it's the market that wags the Fed's tail, if that makes sense. The 5-year, that's actually lost support, but it's just hanging on. I think that's really hanging on because of the other yields, but it's lost the ascending support, so not the strongest chart. The 10-year, however, has not lost its ascending support and it's basically going sideways. It's bounced off its support here. This is very strong support. It's horizontal and ascending, but this pennant is getting very, very tight. So it will move one way or another, break out or break down. I think a breakout on the upside is coming in yields with the market going lower. 30-year, almost identical to the 10-year. It's just very close to its ascending line. And once again, proving how strong the ascending support is because it bounced off it. That's yields. European yields, they were a bit lower. I mean, they moved, unlike the US yields, but they more recently made new highs and they're coming down. So for me, European yields will just curl, go back up, make new highs. So, okay, the British yields are not as strong. You can see they did not make new highs. So there is definitely a difference there. But whether it's the Italians, didn't make a new high, but very close. The French, the Germans, or the EU yield, which is basically the German yield, I see that happening. So generally, yields sideways up, markets down. Let's look at the dollar because the dollar really does remind me of yields. Now, I did say this ascending support, a bit like yields, should act as some support. And to be honest, it was very close to, I mean, we just lost 103.5 in the DXY. And this is following CPI pretty much. Whilst markets went up. And I thought, okay, this ascending support should hold, but it was very close. I mean, as soon as you flush this, you're there. So I was thinking maybe it won't be allowed to act as support because it's so close, but it did. And I'm quite proud of that. So here we've got 4 days of basically this ascending support proving to be support. And it's looking like a bit of reversal, just like the markets to me look like they're going to go down. The dollar looks like it wants to test this 103.5. Price support becomes resistance. And if it does break higher, then we should have this descending line here acting as resistance. Also, when we were trading in this little channel here, this range was also resistance. So I think we'll test this 103.5. If we have some follow through for whatever reason, just news or just dollar momentum, technicals, algorithms, or some data or whatever it might be, or the market crashing, sorry, whatever it is, there's quite a few factors that move the dollar. I think if we do move above 103.5, this 105 will act as resistance, but getting tighter as well. So yields, the dollar, all major asset classes are coming to a tight technical corner where they have to break out or break down. S&P, Nasdaq, yields, dollar, they all sort of have their own chart, but they have some similarities insofar as they're coming to an inflection point. So D-Day is near and, we'll have to follow it. But I think the dollar will bounce and let's see if we can go even higher than 103.5. And then because of that, obviously the currencies, the euro, the dollar, the euro will come down to whatever, at least prior resistance, maybe a bit lower, 105. The dollar would go up against the Japanese yen, probably hit this descending line again. The pound, which has been a little strong today or yesterday now, that'll probably top out here at 124, come lower. We'll see, whatever. The DXY, though, I expect it to touch 103.5. Let's move to commodities. Copper, that's had a crazy move. That should come down, although it was recovered quite well today, I must admit. Although that's kind of a barometer for the general market. So if the markets move down and the dollar goes up, which I think is going to happen, copper should come down despite China reopening. Yeah, I do expect it to come down. Let's at least say $4, nice round number, and just above prior resistance, that'll act as support. Although you could say resistance is really 3.9-ish. Natural gas, for me, this is curling. I've said it's a buy. Even at 4, I said it was a buy. At 3.5, even more so. Now it's just bottoming, just below 3.5, typical. Hit the stops and then move back up, and it'll probably go above 4. So for me, natural gas, very nice buy. Very nice buy. Even if the dollar goes up, I mean, this is a commodity in its own world. You have geopolitics. For me, the Russians are making a nice gains in their counteroffensive. So if that plays any role, but natural gas should go up. WTI, this is beautiful. You've got the federal government ready to buy below 70. So there's a bit of a invisible floor. So you can understand why oil might not go below 70. what a buy. I've been saying it's a buy for several trading days, whether it's below or even where it is here, even above 84, it's a buy. For me, we're going to 90 to 93. You can see there price support, pretty much resistance here, the descending line broken out. So even if the dollar goes up, a bit like natural gas, I expect oil to go higher. Beautiful chart. I love these breakouts. Absolutely love it, especially closing above with some fundamentals behind it. And it's a very liquid market. And you have a lot of big players who believe oil should be going to, 120, 150, 200. So, this isn't on some rumor of this isn't some Chinese fake tech stock on some rumors of a buyout. This is oil. So very nice to see. I expect it to go higher. Gold and silver, my favorite asset class. Now, I did say that on that Friday when we closed at 1920, just above 1920, I thought we'd have a bit of follow through on Monday, even though it was MLK Day. So volumes are thin. You don't trust a day like that, but still, it did exactly what I thought. Bit of follow through, but basically reversal. That's exactly what happened yesterday. But today was really the one that counts, and we have a bit of a move down, a decent move down. So from 1920 down to 1907, and that's with the dollar basically unchanged. It was even red, the dollar. I mean, it put in a nice sort of hammer curl. We looked at that chart already, but it was actually a red day. The point is, if you have gold coming down when the dollar's red, then imagine the dollar going up, which I think is going to happen. I've covered that. Then I expect gold to come lower, and I expect gold basically to come back to its old resistance. Not very old. It was just a few days old. So I expect 1880 to act as support if there's any follow through. So if the dollar goes higher than 103.5 and gold just has some technical mini flash crash because it's just been overbought, then I do see it going to basically low 1800s, down here, which is to get back in line with the ascending support here. So I think 1880, let's see if it gets to 1830, it would be by then. But I'm looking for 1880. I'd love that. I need to buy back in, not gold, but the miners. Silver, I've covered the resistance in silver. You've got the descending, you've got two descending lines. They stretch very far back, which makes them even more credible. They both, I've identified them long ago, and they acted very, very strongly. We also have this horizontal area here, not necessarily 24.5, but basically low 24s, 24.2. We've hit this area several times on the daily chart. We just haven't been able to close above it. So you got three areas of resistance. You also have some SLV gap fill that took place. And obviously you also have gold that hit its resistance. So while silver was hitting its resistance up here, gold crept higher and hit its resistance at 1920. So you've got lots of factors leading to resistance. You've got two descending downtrend lines. You've got this horizontal area. You've got gold hitting its resistance, and now you've got the dollar looking like it's hit a bit of a bottom. So for me, silver it has to come lower. I think it would be low 23. So this area, sort of the low area here on the daily. So basically low 23s. And if we have some follow through, but like gold going below 1880, or let's say the dollar goes higher, or the markets go low and takes commodities with it, whatever it might be, I think much stronger support. And I would actually prefer if this is the case, not just because I need to buy back, but just even if I was long and all in, it's nicer to see strong support here and come back up, a healthy retest. So I think 22, nice round number, will be potentially much stronger support, and we might just get there. Now, if we go even lower, then this area here should be strong support 21. And then even lower here, I haven't drawn those yet. I haven't got around to adding all of them, the support points. There's no point, but I think you can see this one is the least obvious one, but otherwise it's on the horizontal lines, and this one on the ascending. So let's see. I'm not gonna go over it too much. I've mentioned the support and resistance on silver. So far, it's doing exactly what I thought. So nice to see. Let's see if we can go lower, basically. Now let's look at the miners, because that's really where I buy and sell everything related to gold and silver. So the miners were down significantly. I think anything that's 3% or 4% or more becomes quite significant now. Obviously, gold and silver were down. Gold down a little bit, you know, 10, $15. That's something, not a lot, but something. Silver was down more. Um, and the markets weren't really down that much. It was, remember, just the Dow Jones. But the point is, the GDX and GDXJ were down, which means they were really looking for an excuse to go down. I was very happy to see that because I've been selling quite a few days now on the way up. I think that we can easily come back down to this ascending support. I'm looking at GDX here. So if the market comes down, which I think it will, if the underlying metals come down, which I think they will, and the dollar goes up, I think we can easily see this area here. I mean, we're really asking for another 4% move down in the GDX. That can be done in one day, no problem. If there's any follow through, that'll probably have to take another one day or maybe 1 or 2 days. Then I think we'll test this ascending support here. And then if we lose that, which would probably have to take another week, I don't see that happening easily. Then I'm going to be buying with a bit more aggression here, and then finally the ascending support for me. That's the final buy. I'll be buying pretty aggressively there, and then I wouldn't touch it because honestly, if we start to lose this, it means we're going to be testing the lows. It means that the overall market is really flushing, and maybe you can get even better prices. But I would understand people buying down here because what a buy the miners and the metals are. I think this move up has proven it. It's basically been the best asset class this year, but you know, just generally during the bear market, not just the miners, but gold and silver, just amazing, absolutely amazing. So, I mean, I'm long for a reason. Even during the bear market, I think we come out of it much stronger, and it's going to be the best, probably the best performing asset class for the next couple of years. So, no problem buying on the way down, especially after selling quite a bit on the way up. So let's see what happens. GDXJ, very similar, you know. First move down, we're going to see, and by the way, GDX, these support zones. I mean, look, $30, nice round number. GDXJ here, the equivalent to me is sort of 37.5, let's say, on the ascending, also coincides with the horizontal. Next ascending point, next ascending line around here, let's call it 35.5. Then the lows sort of around this period here is the same for GDX, call it 33. And then the ascending is actually very close. So you probably have to machine gun both of those pretty quickly, etc., etc. So let's see what happens. I was very happy to see the miners come down, the metals come down. I feel like there'll be some follow through because the markets will start to come down, dragging the metals down, and especially the miners. And you got the dollar that potentially could move up. And let's see what yields do. I just hope to see some continuation of what happened today. I'll finally finish on crypto, and I won't cover any other asset class because there wasn't much movement. You know, the large caps didn't really move more than 1 or 2%. So that's a non-event. Crypto, you know, we took out this little descending line. I said we'd run. So I said 18,400 in the cards down here. We got there. We broke above it. Next obvious resistance line was here. I said we'd get there. We did. I said we wouldn't get a move during the weekend before the Nasdaq opens. That's true. Nothing happened. But then again, nothing happened today. But then again, the Nasdaq was basically unchanged. So let's see. I mean, Bitcoin is outperforming still the markets. So if there's any move up in the markets, I think Bitcoin keeps going. Next resistance points is 22,800. It's right here. You can see it's not a big one. It's just ventured there for 1 or 2 days. So it's not a big one. Plus, it's very close to where we are. But there's a very big one over here. So if we do come up here, I expect to test, maybe come back down to 21,000, retest, we break that, we go to 25,000. I don't think Bitcoin will really take out 25,000 though. I think that's asking too much. And I think it needs the market to do that. And I think the market's going down. So let's see what happens, especially with me thinking the Nasdaq goes lower to new lows eventually, and it might not take that long. Maybe this is a last hurrah for Bitcoin before basically flushing to new lows. Another wipeout, possibly the final wipeout. Very interesting though, because I own Hive. I've sold a lot of it. It's basically half of it. So I'd like Bitcoin to go down. If it goes up to 25,000, I'm going to close my crypto miner and just wait and see. So that'll do for today. Just a quick video covering everything. I actually made a video just before this, and then I found out my daughter had muted the microphone, so I did it all for nothing, which is why today's video I'm speaking maybe a bit more quickly. Anyway, enjoy the evening. See you tomorrow.